Well, hi guys, welcome to this Moneycontrol live stream Tuesday morning, and you're watching Opening Bell with me, Nandita Khemka. Well, the cues are fairly positive this morning. We saw a very strong rebound on Wall Street after the drop it saw day before yesterday. So almost over a percent rebound on the Dow and Nasdaq, and S&P 500 of course has snapped out of a 4-day losing streak. Asian markets off highs, but nothing really to complain about, and the GIFT Nifty hinting at a positive start above that 25,000 level on the Nifty. Lots of stocks in focus, the likes of Dixon Tech, GMR Airports, quite a few of them. We'll touch upon all those stocks, and we'll also be getting all your stock related queries answered by our technical expert on the show. So if you have any queries, as usual, keep them coming in on our live feed on YouTube. We'll try and get them addressed. But of course, before we move any further, let's quickly take a look at the top headlines at this hour. Wall Street sees a sharp rebound with the S&P 500 breaking a 4-day losing streak. The Dow and Nasdaq too gain over a percent each as investors bet on a higher quantum of rate cut by the Federal Reserve. Asian markets trade higher following a sharp up move on Wall Street. The GIFT Nifty, as I mentioned, is also suggesting a higher start for the Indian market. Crude prices somewhat recover after posting their worst week since October 2023. Brent, in fact, is trading near $72 a barrel, even as the outlook on demand remains uncertain. And no major decisions at the GST Council meet. A group of ministers will look at 18% tax on insurance premiums, and a decision is likely by November. Another ministers' panel will discuss compensation cess. No decision taken on hiking taxes on payment aggregators for low-value card transactions, while the council has decided to lower GST on cancer drugs and namkeens and savouries. Well then, let's take a look at the cues that we are getting for trade this morning. Of course, yesterday was a very good rebound from the day's low. In fact, the markets ending higher, and the Nifty also ending above that crucial level of 24,900. But it was the broader end of the markets that was underperforming. The breadth was, of course, in favor of declines because the mid and small cap indices were under selling pressure. But two pockets did well. The Nifty Bank Index did well to recover over 500 points from the day's low to end higher by about 1% or thereabouts. Nifty FMCG index, of course, deserves mention given the fact that it hit a fresh record high. A lot of these consumer names like HUL also hit a lifetime high. ITC was in good stead, and so were the likes of Britannia, Nestle. So a lot of traction when it comes to FMCG names. PSU index, on the other hand, continues to be under pressure. The Nifty PSC index was down nearly 2%, and the likes of PFC, REC, all these stocks, fell somewhere around 4% or thereabouts. In terms of the put call ratio, it was at 0.96 vis-a-vis 0.92 in the previous session. Quickly take a look at the stocks that will be in F&O band today, continuing to be in F&O band rather. Aditya Birla Fashion, Balrampur Chini, Bandhan Bank, Biocon, Chambal Fertilizer, Hindustan Copper, as well as RBL Bank. Good news is both FIIs and DIIs were buyers yesterday. In fact, yesterday. So let's quickly get on board our technical expert for today. Joining me is Ruchit Jain, who's the lead research analyst at 5paisa.com. Ruchit, great to have you on the show. Given the fact that we saw a very good recovery coming in yesterday, and we are holding on to that 24,900 mark, and we have good global cues to work with as well this morning, right? So 25,000 a given on the index today?
Yes, hi, very good morning, Nandita. Well, quite possible because the kind of recovery that we saw post that negative opening yesterday, which indicates that possibility at lower levels, again, the buying interest is quite strong. And even if you look at the data does not indicate any kind of significant short formations in yesterday's trading session. In fact, if you look at the long short ratio of FIs, it's still around 64%. So, which indicates that there are not no significant shorts getting formed in this last 2 days of correction that we have seen. So I think that 40 DMA is quite crucial support for the short term, which is still intact. The 40 DMA is now placed around 24,650 levels. So from a short term perspective, till that support is intact, I think if any corrective phases would also be there, then there would be more of a time wise correction rather than any kind of no significant price wise correction. So I think a bounce back definitely could be there today. 25,100 is a 61.8% retracement of this entire correction of last two trading sessions which we saw. So we can expect levels around 25,100 on the Nifty.
What about the Nifty Bank Index? Recovered very smartly from the day's low. In fact, today we have the Nifty Financial Services Index weekly expiry as well. Do you expect this rebound that we saw on the Nifty Bank Index to extend? Because in the recent past, whenever we've seen rebounds on the Nifty Bank Index, it has proven to be fairly short-lived. This time around, what are the charts saying?
Yes, so but yesterday's action was quite important because the index has taken a support around its 89 EMA. And one noticeable thing was that the entire recovery that we witnessed in the banking space yesterday was more led by the index heavyweights from the private sector banks. So I think this is a positive sign, although from a bit medium term perspective, no, there has been a considerable underperformance in the Nifty Bank Index, and the index need to surpass this recent swing high of 51,750 for that high top, high bottom structure. Till that is not taken out, no, the medium term trend still remains sideways. But yes, from a very short term or intraday or 1 or 2 days perspective, the kind of outperformance that we are seeing in the private sector heavyweights yesterday, I think that should continue. So we can expect a bounce back towards 51,500, 51,700 again in the Nifty Bank Index as well. So maybe FMCG and index, which you just mentioned few minutes ago, that these were the outperformance in yesterday's session. I think they could continue to move in that higher direction today as well.
Okay, that's the view on Nifty Bank. Yesterday's action was fairly important, and perhaps this time around, it won't be as short-lived as it has been in the recent past. But before I come to your stock recommendations, Ruchit, want to get in your thoughts on some of these, names like Gopal Snacks, Bikaji, Pratap Snacks. Given the fact that the GST Council yesterday has cut rates on namkeen to 12% vis-a-vis 18% in the pre-open as well. We can see, some of these stocks, clocking in good action, 8 to 9% kind of gains. Anything on the charts that is catching your attention among the three of these stocks?
So if I compare the price movement of all three, then I think no doubt Bikaji has been an outperformer in last 3 or 4 months. The price up moves have been supported by good volume. So I think this trend could continue given this positive news. But these stocks are already opening with a huge gap up today based on the news. So whenever we see such gap up opening, the follow up move actually is more important rather than the gap. So I think wait for the follow up move. How the follow up is there for the follow up move is positive in all the three stocks. Then I think Bikaji could stand out amongst all these names.
Okay, even the GST rates on cancer drugs have been slashed, and we've all seen pharma stocks gaining good traction. So anything between Lupin, Dr. Reddy's, Cipla, any of these stocks after the run up, do they warrant a buy, or would you advise looking at these stocks on dips?
So the broader trend for pharma also still positive, but yes, the stocks have seen a significant sharp up move recently. So I think if we get any kind of consolidation or minor dips, then it could be a good opportunity to buy on any kind of decline. So amongst the entire basket, I think if we see then Lupin and Alchem Labs, from the pharma names, these are two stocks which have very positive chart structure still. But it's just that from a risk reward perspective, I think if you get any kind of declines, then one should take that as an opportunity to create fresh longs. Any existing long positions, if there are, then they should continue to ride this trend.
Okay, what about Aarti Drugs? This stock will also be in focus because they will be buying back, shares somewhere around 0.7% of the equity worth somewhere around 60 crore rupees, and this will be bought back at 900 rupees per share. And the buyback will be opening on the 11th of September and closing on the 18th of September. Last 5 sessions, the stock has actually, not really clocked in any gains. It has in fact lost somewhere around 5% or thereabouts. How is this chart looking to you, Aarti Drugs? It's actually quite, 100 rupees off. Please go ahead.
Yeah, so Nandita, if you see positionally, the stock has seen a long consolidation phase where whenever the stock is coming around that 650 mark, we are witnessing selling pressure over there. Last year, just a year ago in August 2023, also 640, 650 acted as a resistance from where the stock corrected towards 450 levels. Even this time, if you see, last 4 or 5 days ago, similar high was there around 630, 640 range. So I think until we see a breakout above that 650, we won't see that kind of run-up move happening in the stock. But yes, because of the buyback news, the stock has already corrected since last 6-7 days. So we can expect some stability now and some pullback move could be there. But I think positionally, if one is expecting any kind of significant run-up, then it would happen only post a breakout above 650. Otherwise, 650, 520, I think this would continue to be the range for the stock.
Right. Hold that thought, Ruchit. That's about RT drugs. But of course, we have the opening bell and the first ticks coming in. It is a start around that 25,000 mark, as we were discussing. We have carried the momentum from yesterday into today's trade as well. Of course, given the fact that we have strong global cues as well to work with. The Sensex also up somewhere around 200 points or thereabouts. The Nifty Bank Index, has opened in the green as well. So a 0.3% kind of gains coming in on this particular index. 51,200 is where it's at. I would also want to see what the FMCG pack is doing, given the fact that yesterday it hit a fresh record. It was up somewhere around 2% yesterday. Today as well, flat but trading with a positive bias. Just want to mention all the sectors are trading in the green, so it's a broad based gain that we are looking at, and also the fact that even the broader markets are in fine fettle. In fact, the Nifty mid cap index is up almost 1%, so outperforming the benchmarks by a wide margin. Looking at some of the sectors that are doing well, metals up 0.5%, pharma index up 0.7%, PSU bank index, mind you, that has been under a fair bit of selling pressure, has managed to stage some recovery, 0.6% higher for this particular index. Media as a pocket is doing well, and so is realty. That index is also up 0.6%. So all in all, a good start, positive start, 25,000 on the charts once again. We've stabilized after some bit of headwinds that came in from global markets. We were reacting to that, but let's take a look at the individual movers then. Some of the pharma names dominating the gainers list on the Nifty: Divi's Lab, Apollo Hospital. These are some of the gainers. Aside of that, you have LTI, Mindtree, and Infosys. Yesterday, of course, IT was in a spot of bother, but today we have a Motilal Oswal report on IT, and they have listed out some of their top picks from the IT space. So LTI, Mindtree, Infosys, Tech Mahindra, all of these are on the gaining side today. Axis Bank also continues to gain. Tata Consumer, Wipro, Bharti Airtel, these are some of the other gainers. The losers list is few and far between. SBI Life and HDFC Life topping the losers list. Of course, the insurance data that has come out has not been all that enthusing, which is why these stocks are under pressure. M&M, Bajaj Auto, Asian Paints under pressure, and so is Hindustan Unilever. Remember, the stock hit a fresh high yesterday, today under some bit of selling pressure. Some auto names, some consumption names under pressure, but all in all, it's a good start. Ruchit, looking at the market open, what would you be recommending for our viewers this morning?
I think for today's trading session, one should keep a stock specific approach because index is already open near the 25,000 mark. And if I look at the open interest and the Nifty weekly options, then 25,000 call option itself has the high open interest so far. So I think that could be some kind of resistance around the 25,000, 25,050 for intraday. But yes, the stock specific action since yesterday is quite positive. So do not expect any significant downside as well. So I think one should keep some stock specific approach in trade. For the index, I think if we get any kind of dips, so one should wait for some any intraday dip towards 24,930, 920 if one has to create intraday longs.
Okay, that's what the cue is. But hold that thought, Ruchit. Let me also get on board our next guest for today. Joining me is Anshul Sehgal. Anshul, great to have you on the show. Given the fact that we have been seeing, or we have seen a volatile month so far, the month of September, which is known to be a seasonally weak month for the markets, right? The returns in September hasn't really been all that great over the years if you have to go by history. But given the fact that there are cues to watch out for this time around, we have the Fed meeting, all important Fed meeting coming up next week. So do you expect this seasonality to play spoil sport this time around as well, or do you think once that 18th September event is out of the way, we could look at positive returns for the month?
Good morning, Nandita. Actually, I would recommend your clients to not look at this market on a month-on-month basis. What happens generally
Hi
is
Anshul,
that
is my
if you
voice
get
reaching you?
caught in short, yes, can you hear me? Can you hear me?
Yes, I can hear you.
Hello.
Please go ahead.
Yeah. Good morning. Audible now? Okay.
Yeah, you're audible, Anshul. Please go ahead.
Okay. Yeah, so I would suggest that your clients don't look at this market on a month-on-month basis. It would be in their own interest to look at the markets from a long-term basis. What happens is that if you get caught into the short term, then you miss long-term rallies and long-term moves in the markets. I still remember that in 2004, when the Sensex itself was around 3,000 points, and we saw the incumbent government go out of power, the markets fell quite meaningfully in that one day when the government went out of power. If you were working on a short term basis and looking at the markets in the short term, then you would have missed the rally from that 3,000 point number to today, a 20-year sort of period, the markets being 80,000. So that is the kind of upside that you miss if you focus on the short term. And hence, looking at this month or the month after may not be the right strategy for investors. I would suggest that to make money, look at the long term, look at the next 3, 5 years, 10 years even, and then invest. Don't be in a hurry to make money, because it is in that hurry that you end up not making money. Be patient and look for the long term, and you will make money in this market. India is in a very sweet spot. At this moment, of course, valuations are slightly stretched, but in the long term, say 3, 5 years, India will continue to grow, and that will reflect in further valuations.
But looking at the recently concluded earnings season, the first quarter earnings season, what was or what were your key takeaways from there? And going forward, which pockets do you think will have the edge when it comes to quarterly earnings?
Yes, Nandita, that is an important point. Actually, in the near term, what we have seen in this quarter is that earnings, that is profitability, has kind of converged with revenue growth. In the last year, we saw that earnings quite surpassed revenue growth. While revenue growth was 10, 11%, earnings were 20%, earnings growth was 20%. While in this quarter, we've seen that number being in the range of 8 to 10% for both revenue as well as earnings. Now that tells you that there is some amount of a slowdown in terms of earnings growth in this first quarter. But of course, we've got to bear in mind that this is on a high base, because last year was a high base. Now, having seen that, and looking ahead, the street seems to be building a 13 to 15% kind of earnings growth for the next 2 years, and that seems like a healthy number. What my recommendation to your and my suggestion to your client would be is that they should stay away from segments which are highly in favor, where nothing seems to be a hurdle for these stocks to do well, and which is why the valuations are really out of whack. For instance, defense has been spoken of in the last 3 years. Even PSUs, some pockets of PSUs, for instance, railways, that has been spoken of in the last 2, 3 years. And it is there that we find froth. Even in the private sector, say the SME segment, there again, some of the stocks have really hit the roof. You've seen stocks in the last 1 to 2 years go up as much as 5 to 10 times. After having done that kind of a rally, it is important for these stocks to actually cool off, or at least time correct before they can carry on with the rally going ahead. And on the other hand, there are certain segments, say the financial space, even if you look at some of the commodity segments like sugar, ethanol, that space. If you look at certain segments in capital goods, there again we find opportunity. And then diverse segments that we find opportunity. I think this will be a much more a stock pickers market than a general trending market, where you will see segments trend overall, and which is why this is a time to be slightly cautious rather than being a hero in the markets and come out and buy anything with the anticipation that what played out in the last 2, 3 years will play out going ahead as well.
Right, Anshul. FMCG, that's one pocket that I want to discuss with you. Given the fact that, the index is perched at record levels, stocks like HUL have hit record highs, even the likes of Dabur, Marico, these, companies hinted, during their first quarter numbers that there are signs of rural recovery, and here on earnings picture will be much better than, what they have clocked in terms of volume growth. But do you think now, given the fact that the stocks are at record highs, valuation could be a cause of worry? Because any which ways, traditionally HUL, FMCG stocks rather, are high PE stocks. So how should one really navigate or cash in on this FMCG up move?
High PE generally doesn't mean, in our judgment, that stocks are expensive. Certain stocks will always command a high PE. If you look at the FMCG space, it is there that you have a steady growth irrespective of conditions in the economy. You have very high ROEs, you have low requirement of capital, and which is why these companies trade at high PEs. What becomes relevant is that in that high PE, how much of growth is already priced in. If you look at the last 3-4 years, many of these FMCG names have really gone nowhere. And it is in this time that the general market has rallied quite meaningfully. One of the reasons why this segment has gone nowhere is because volume growth in this segment has been quite tepid, in the range of 3 to 5%, and that has consistently been the case and over this period. And prior to this period, their valuations had expanded quite meaningfully. So these FMCG names needed some time to digest that expansion in valuations. I think that much of that digestion has played out. Going forward, if we believe that the rural economy is going to do well, which is what most of these companies are suggesting, and if volumes were to pick up, were to accelerate from say 3-5% to even 7 to 10%, that will be taken as a positive for this space. And given that most of the market is expensive at this time, FMCG space will be a good space to hide, where downsides will be limited, and if volumes do pick up, then upsides can be reasonably good. In fact, I would say that the upsides could be beating the index levels. So this is a good space going forward in our judgment.
Another space that has seen a lot of action, is the two-wheeler space. With the entry of or with the listing of Ola Electric, and now Ather Energy also, filing for its IPO. Do you think the likes of TVS, Bajaj, they have the muscle to, overtake Ola Electric and the EV players, given the fact that, there are quite a few positive views on Ola Electric and how it can, or it has the potential to turn into a multi-bagger. So how do you see the dynamics really playing out in the two-wheeler space now with the entry of these new players?
I will look at this space with three vantage points. One is the growth in the incumbent players' volumes. Second is the valuations, and third is the new tech, which is the EV, and how replicable is their growth and profitability going forward. Now, we know for a fact that the incumbent players have over the years delivered profitable growth, of course, in cycles, but clearly they've delivered profitable growth over a really long period of time. We also know that it's not going to be the case that all of the incumbent players' products will be replaced by the EV space. There will always be a segment of the erstwhile technology playing through in demand in the country. Given that, and given that this space has again consolidated for the better part of the last 3-4 years and is only just starting to show volume growth, this volume growth should continue in our judgment. Also, this space is quite linked to tier 2 and rural economy, which of course is only just picking up. And if that space does pick up, then discretionary spends in that space go up as well. And this is a discretionary spend, so this the two-wheeler auto space should benefit as a result. Now, that is on the volume side and the growth side. But then let's look at valuations. If you look at many of these companies, they have more than doubled in the recent times, in the last 1 year, in anticipation of volume growth. Given that, I would say that the easy money is behind us. Going forward, these companies will have to beat expectations for valuations to uptick from here as well. And then if we look at the third vantage point, which is the electric vehicles have been profitable so far because there are government subsidies, and there is also government sort of backing that these companies have, because the government also wants a transition from the erstwhile technology to the electric vehicle technology. Now, in this environment, these companies are doing well, volumes are growing, and maybe they're making some money. But assume a situation 1 or 2 or 3 years ahead where government subsidies and government support goes away. Will these companies remain as profitable? I don't know. I don't have an answer for that. And if these companies are coming
Hmm.
out with IPOs at valuations which are building in consistent growth going forward, then I would be wary. For me, what is most
Hmm.
important is the valuation to growth metric and profitability metric. If valuations build in most of the profitability and growth, it doesn't matter whether you're buying the most technology intensive company. Making money from there is going to be difficult, and hence I would need to see the valuation to growth
Right.
metric in IPOs before I take a call.
All right, that's the view. But very quickly, before I let you go, three themes, for wealth creation in the long-term bull market, according to you.
I think that the manufacturing and capital goods space has significant room for growth. After a 10-year consolidation, we are seeing a capex cycle in India. This space will see significant growth going forward. I think rural linked discretionary companies are going to be the jokers in the pack going forward. I think that they have again not done anything over the last 3 4 years, and at a time when the markets have rallied, they have consolidated. Hence, valuations remain reasonable over there. That space should do well. Third, I think that from here, media, certain segments in media will do exceptionally well. I think we are at a cusp where media consumption is just going to explode, and we have our per capita income is $2,600. Imagine what happens when this goes to 3,000, $3,500. What happens to advertising? What happens to subscription on a population base of 1.4 billion people? I think that space also is
Hmm.
quite interesting at this time. So these three themes is what I would look at currently.
Right. With that, Anshul, would like to thank you for taking out time and joining in this
Thank
morning.
you,
Always a
Nandita.
pleasure chatting with you, and I look forward
It
to our
is my
next
pleasure.
interaction
Thank
as
you.
well.
Thank you. I do too.
Thank you.
Thank you.
Well, with that, let's quickly go back to Ruchit and get all your queries addressed by him as well. Ruchit, the first query is coming in from Srivardhan Gupta. He wants to know your thoughts on Poonawalla FinCorp. He has some holdings. He holds 2,500 shares at 340 rupees per share, and he wants to hold it for a couple of years over the long term. What would you advise him in terms of levels? What kind of levels can we expect on Poonawalla FinCorp if you look at the long term charts?
His buy price. I think he has bought around the recent lows only, because the stock prices have already seen a corrective phase, and it has a very strong support around the 330, 340 range if I look at the historical data as well. And on any kind of pullback moves again from 1.5 years perspective, we can expect levels around 480, 500 range again, where again he can review in case if the stock comes there. So continue to hold on the stock. You can place a stop loss below 330 because technically that's a very strong support which if broken, then the entire structure would change. So keeping a stop below 330 can continue to ride this trend.
Okay, that's the view. The next query is coming in from Satya CK, wants to know your thoughts on an Indegene. I mean, not it didn't list very long ago, but he wants to know whether one should enter for the next 1 to 2 years with a target of 1000. Going by whatever data you have, would you suggest holding on to it or entering it at current levels?
So Nanda, very difficult for me to take any call on this because it has limited data recently listed. So I have no idea about this, because of lack of data. So I would recommend him to take some fundamental view on this before, looking to enter fresh investments.
Right, right. So, just a note to our viewers, if it's a recent listing, our technical analysts won't really be able to help you out because of the limited data available to them, which is why I'm not taking Gautami's query on Premier Energy as well, because, the stock has recently listed and, due to limited data, I don't think Ruchit will be able to help you out there. But the next query, let's take up the next query from Rajesh Shrotri. It's come on BHEL. The stock has been under pressure along with some of the other PSU names. Over the last 1 month, it has shed 11% or thereabouts. Even the 6-month returns have come down to just about 5% or so. What should one do with the BHEL now? It's come down to 265 rupees.
So that's a short-term corrective phase, but if I look at the longer-term trend, then I think just because the momentum readings were quite overbought when it went about that 300, 330 kind of range, so that readings are getting cooled off. So I think the price-wise, it's a corrective phase, and the support for the stock is placed in the range of 250 to 245. So some more downside could be seen, but it does not seem to be entire trend reversal on any kind of significant downtrend the stock is. I think just because the stock had rallied very sharply and hence the correction is a bit sharp. So in short term, do not expect any significant up move. But in case if you get any dips where the stock comes around the 245, 250 range, then I think that could be a good opportunity to buy more shares over there.
Okay, that's the view on BHEL. Hope that answers your query. The next query is on IRFC. This one's come from Sanjay. Wants to know whether he should hold or sell. Hasn't really mentioned how many shares he holds. But same for railway stocks. Do you think the railway stocks are in a short-term corrective phase, and this correction could actually be utilized to buy or even average for that matter?
So yes, Nananda, in fact, if we see many PSUs have seen some correction in the last few days, and I think this is more because of the kind of rally that these PSU names had shown in last 6 to 8 months. So these are just corrective phases within an uptrend. I would recommend to hold on the existing long positions in IRFC, but yes, any fresh buying I think should be done on dips if the stock comes around that 155 mark, because the weekly 40 weeks moving average support is there around 155. So hold on to existing positions, but in case if in this correction the stock comes towards that 155 mark, then those would be good levels where no averaging could be done or fresh buying could be done.
Okay, that's the view. Hope that answers your query. I want to take up a query on ONGC that's come in from Abhishek Singha. Now, ONGC has been under pressure, right? Crude prices have come off quite a bit, and yesterday you had Citi, I think, downgrading the stock as well. Stock is down almost 13% in the last 1 month. Within the energy pack, would you advise traders to stick to OMCs, or would you say that ONGC Oil India should be bought on dips, or are they entering oversold zone now?
So Nandita, I think that would depend more on what time frame is one is looking at. If one is a short-term trader, then definitely there is a direct correlation with the crude oil prices, and if the crude oil prices stay at lower levels for a bit longer time, then I think these ONGC Oil India could see some relative underperformance. But the long-term charts are not negative at all. The kind of price volume action that we have seen in the previous up move is quite strong. So I think buy and dip strategy should be kept if you're looking to add this stock in your portfolio for a bit longer term time frame. Major support for the stock would come around 275. So I think some more correction, one can wait for some more correction. If towards the 275, 280, I think that's where the risk reward ratio would become to take contra trades. But yes, if you're a short term trader, then you can stay away. But for long term investors, I think ONGC would be good buy if it comes around the 275 range.
Okay, that's the view on ONGC. Hope that answers your query. But let's take up a query on Maruti then. This one's coming in from Varsha Gajjar. wants to know whether one should enter. Now, Maruti has been stuck in the slow lane, so to say, last 1 month as well. It's not really done much, has been fairly sideways. Even 6 month returns, nothing to really, take home about. But do you think one should enter now with a medium to long term view?
I think from a medium term perspective, one can enter fresh longs with some room to average if we get any kind of dip towards the 11,500, 11,600 range. But not for short term trading, because from short term, as you clearly mentioned, that the stock is not doing much since last few months. So this seems to be more of a time wise correction if you look at the longer time frame chart. So one can buy for longer term, but not. I wouldn't suggest 100% at current levels. Whatever you want to buy, you can accumulate about 40% of that quantity at current levels. And if you get any dips towards that 11,500 kind of range, and those would be good areas where no one should look for aggressive buying.
Okay, that's the view on Maruti. Just a couple of more queries to go then. How is the Bank of Baroda stacked up on the charts now? PSU banks per se have been under selling pressure. Satvika Ranganathan wants to know your view, particularly on a Bank of Baroda. Uh, are you suggesting one should perhaps rotate into private banks, or stick to Bank of Baroda for perhaps 3 to 4 months?
So, Nani, the PSU banks have seen a relative underperformance since last 3 or 4 months, especially after their election results outcome, where we have seen most of the sectors making new all-time highs. The PSU banking is one space which had not participated at all in in this last 2 3 months. So, I think this is a short-term relative underperformance which is going on. But these are not the prices where one should look to exit any kind of existing holdings, because the stock has already seen a correction from about 290, 300 to 235 kind of price now. So maybe some time-wise correction could be there because of this relative sectoral underperformance. But I think if any existing positions are there, then one should not look to exit or book any kind of losses over here. The stock has very strong support, positional supports around 220. If I look at a bit weekly or the medium-term chart. So hold on to existing long positions. If we get any kind of dip towards 220, then that would be good levels to add fresh longs or do averaging in Bank of Baroda, but not a kind of stock where you should book losses or exit your existing holdings at current price levels.
Okay, that's the view. Hope that answers your query. The next query is coming in from Bhavin. Wants to know how long will it take Ujjivan Small Finance Bank share price to cross 50 levels? The stock has, been under pressure, most of the year. Last 6 months, it has shed 15% or so. Did try to make some recovery off late, but hasn't really played out very well. But do you see levels of 50 anytime soon?
Not really a big underperformer if we compare the stock with others within the sector. So I think where there is a sectoral underperformers, it takes time to make that kind of recovery happening again. First, I think other stocks within the sector, if they start going up, they start coming in an uptrend, then I think later on in the later part, such underperformers tend to show some good up move again. So I think as of now, there are no signs of any kind of up move. The stock has support around 41 and resistance around 46. So maybe the stock would continue to consolidate within this range.
Okay, not expecting levels of 50 on Ujjivan Small Finance Bank anytime soon. But last query really for the day coming in from Alex, wants to know your thoughts on Galaxy Surfactants. Have you been tracking this chart? Any thoughts?
Chart structures are positive. It just needs a breakout above 3200 mark for any good trended phase to come in again. If any existing positions are that, then they can continue to hold on. 2750, 2800 has become a very strong support base if I look at the short to medium term chart. So till these levels are intact, like existing longs can be held on, but 3200 will be the important level to watch. The breakout above 3200 can take the stock towards 3500 to 3600 very soon.
Okay, that's the view on Galaxy Surfactants. But with that, we've come to the end of the query segment. Ruchit would like to thank you for taking out time and joining us and sharing your thoughts with us, and also helping our viewers navigate their holdings. Look forward to chatting with you sometime soon.
Thank you. Thank you very much.
Well, with that, before we go, of course, another IPO has opened up this Tuesday. PN Gadgil Jewellers, it's at 1100 crore rupee IPO. It has opened up today and closes on the 12th of September. The price band is at 456 to 480 rupees per share. There's a fresh issue of 850 crore rupees and an offer for sale of 250 crore rupees, and the proceeds of the fresh issue will be used for store expansion as well as debt repayment. In fact, the company has already raised somewhere around 330 crore rupees via the anchor book. Of course, that's one IPO that you should be keeping on your radar. But aside of that, you had the big Apple launch last night, and Apple at its flagship event announced the all new iPhone 16 and iPhone 16 Plus. The iPhone 16 series now consists of 4 models, and the iPhone 16 comes with new camera control button. A new series of Apple Watch and new versions of the AirPods have also been announced. In fact, Apple also has revealed its AI offering, Apple Intelligence, which will launch as in beta form next month. In fact, the new Apple products will be released on 20th of September. Well, with that, looking at the market, we have cooled off somewhat from the day's high. In fact, we have given up that 25,000 mark and flattened out quite a bit. In fact, the Nifty Bank Index has slipped into the red. So any rebound that we have seen on the Nifty Bank Index has proved to be short-lived rather. But let's see whether or not the texture could change, because it's still early days to comment on whether or not we have given up all the gains for the day or not. In terms of movers, of course, pharma continues to do well, and some of the private bank names are holding out. And on the losing end, you have life insurers and Bajaj Twins, as well as some of the financial names not doing all that well. In fact, SBI continues to trade under that 800 rupee mark. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and of course, have a great trading day.